All right, welcome back, everyone. These are my most recent trade on Euro US dollar. Of course, you guys know I trade Euro US dollar every day. Now, all these trades were taken from the low of the day and from the high of the day. And if you really want to be a successful day trader, you must know how to frame your trade from the low of the day or from the high of the day. And that is what this video is all about. I'm going to teach you guys how to frame the low of the day and the high of the day. Now, majority of you watching me right now, most of you guys are used to ICT power of 3, which is this diagram you are seeing here. This is the daily candlestick. This is the open of the candle. And then price take out this Asia liquidity, or this sell side draw liquidity, this range, throw it to the downside, then expand for the rest of the day. So most of you guys are used to this concept, this ICT power of 3 concept. The only issue I see that most students have is they don't know when this low of the day has formed or when this high of the day has formed for a bearish day. Now, before I show you guys everything about high or low of the day, I want to bring you guys back to this daily time frame. Now, all these candles definitely are the daily candles. And if you take a look at this time frame, you observe we have two types of direction. Of course, in market, we have two types of direction. We have continuation direction, and then we have reversal. Every turning point in the market is reversal. Now, when it comes to high or low of the day, the way you approach continuation is different from the way you approach reversal. And I'm going to show you guys an example when we get to lower time frame. So I'll show you guys how to frame high or low of the day for continuation days like this. These are continuation days. And also I'll show you guys for reversal days. All right. Now, when it comes to high or low of the day, there are two powerful elements I want you guys to take note of. Number one is this session key zone you are seeing here. Okay, this session key zone. If you don't have this indicator, you can identify it manually. London key zone or New York key zone. Okay, all this yellow shaded area are my London key zone, and then all this green are my New York key zone. Now, why did I bring up this indicator? You see, when it comes to day trading, every day you want to trade the market, 90% of the time, the high or low of the day must form during this London key zone. All right, all this yellow shaded area my London key zone. So London session usually definitely 90% of the time form high or low of the day. Now, basically looking at my screen, you will see that almost every day the low or the high of the day must form in this shaded area. So if it's a bearish day, the high of the day will form in this yellow shaded area, which is London key zone. If it's a bullish day, for example, this one, the low of the day will be formed in this yellow shaded area as well. This, you can see here, the high of the day was formed here. Of course, the high of the day was formed here. Of course, the high of the day was formed here, and so on and so forth. Now, remember, I made mention of two elements. The first element is this London key zone I just showed you. Now, the next element I want to show you guys is the PD array. Of course, price must have a reference point before that turning point on everyday price action. For example, you can see the high of the day was formed here in London key zone. But if you take a look at the left-hand side, you are going to see this other block, okay? This is the other block that price used for, okay? So that is this other block. And most of the time, the other block will be formed in New York key zone. For example, this is the New York key zone right here. So the whole process is this. London session is going to form high or low of the day. Then the reference point is definitely going to be the New York PD arrays. Most times, it's going to be this PD arrays formed in New York key zone. But sometimes you can see this is the current price action day, all right? This is Euro GBP, all right? New York key zone PD arrays. Now, this kind of reference point is done for continuation day. If I go back to daily time frame, you will see that this day we are trading is a continuation day, all right? Continuation day. You can see this was a continuation day, and then the other block was formed from the previous day New York session. But if you want to do it for a reversal day like this one or this one, let's make use of this one. This one is very, very much obvious, all right? So if you want to do it for this reversal day, the approach is going to be different. But the only difference is the reference point, not the London key zone, because definitely whether it's a reversal or a continuation day, London session must form the high or low of the day for an ID trading day. ID trading day means a true trading day, all right? Meaning that will be the day that price action algorithm will deliver efficiently. So let's go back to this day, Tuesday, 23rd of April on lower time frame. So if I go back to this day on lower time frame, okay, let's see what we have there on lower time frame. Okay, of course, you see, first of all, the high of the day will be formed in London key zone. Of course, it has to be London key zone. So you must make sure whatever you are doing, the high or the low of the day must be formed in this London key zone. That is the most powerful element, okay? The reference point does not really matter, okay? Sometimes you may reference the previous day for a continuation day, but sometimes you may reference a PD array that is not on the previous day for a reversal day. But this particular reversal day, there was a PD array at the left-hand side. That's why we can use this other block right here, okay? And remember, it still has to form in New York key zone. So basically, there are two powerful things I'm giving you guys in this video. First of all is you must know how to identify your London key zone every day you want to trade. And then you must reference a PD array at the left-hand side like this one, okay? You must wait for the price to come back to this PD array. And then it must form the high of the day in this London key zone. So how do I approach any trading day I want to trade? It's very, very simple. So let's say I want to trade this day. You can see the high of the day was still formed in London key zone. It's just that simple, guys. Every London key zone will form high or low of the day. And that is the secret I'm giving to you guys. So after identifying my London key zone here, London key zone usually from 2 a.m. to 5 a.m. or you use this indicator here. So after identifying my London key zone, the first thing is reference my PD array on this New York key zone. Okay, like this other block right here. That's what price used to form this high of the day here, okay? So after this high of the day is formed, then the next thing is for me to take my trade and then leave it to run for the rest of the day. Now, the advantage of trading high or low of the day in London key zone is that you are going to participate in the big move of the day because London session is definitely going to give you the biggest move of the day. New York session, most times, is usually a continuation of what London session have done. You can see if I place my trade here, this is going to be the biggest move of the day instead of trading here in New York key zone. So I believe this video has been very, very much insightful and helpful to you guys. If you are new here, hit the subscription button, turn up your notification button. I will see you guys next upload. Peace.